Hi students. A brief definition. Accounting concept refers to the basic assumptions, rules, and principles which work as the basis of recording of business transactions and preparing accounts. Dual aspect concept, also known as Duality principle in accounting, states that every business transaction should have double entry in the bookkeeping system. Dual aspect concept, also known as duality. Dual aspect concept records every transaction under two basic classifications of credit and debit. Historical cost, value of an asset, is recorded at its original cost acquired by the company. Shun the jargon. Simply purchase price. The matching principle is based on the cause and effect relationship between spending and earning. It requires that any business expenses incurred must be recorded in the same period as related revenues. Prudence concept. Intelligent approach. One for income and exactly opposite for expenses. Income or profits are not recognized unless earned. Losses are recognized at the first knowledge. Provisions made. Now, let's look at MCQ. In financial statements, inventories are valued at the lower of cost and net realizable value. In the statement of financial position, which accounting concept is being applied? A. Duality. B. History cost. C. Matching. D. Prudence. A. The question is not about double entry principle. B. It is not about original purchase price either. C. It is not about income is matched with expenditure for same period. Yes, it is about intelligent approach. When you know the cost is not going to be realized, foreseeing a loss, it has to be absorbed beforehand.
Okay, students. We end this session for the time being. If you have enjoyed the video, please subscribe, like, share. We have more than 30 videos in our YouTube channel and many more are to come in next few days. Keep following us. Our YouTube address is SL Account School. SL Accounts School. Thank you.